Hey everybody, today we're going to go over our after the review for this event rental business. Here we're in our Skool for subscribers. So we'll give you a little preview for those non-subscribers. And today we're going to post our full investment memo review, which looks a little bit like this. So we use a group of AI prompts as well as our financial model on a pre-LOI basis to get a quick and dirty investment memo of what this company does and what the financials might look like afterwards. And when you're in the search world, it's a volume game. So you want to make sure that you're seeing as many companies as possible. And that's a good way to do it given where AI is. So let's start off with the listing. Today's listing here, the asking price, $3.5 million. Cash flow, a little over $1 million, which is a good number for a lot of searchers. The gross revenue, 4.1 million, and established in 1991. This is a key of today's listing, $1 million in equipment, which is a ton. So when you look at this on a basis of overall asking price, make sure you're thinking about the equipment, right? Equipment's always going to be included in the overall asking price, but as a buyer, it's important to note, as a seller, you're going to want to get paid for that, right? So if I'm selling you my business that I've run since 1991 with $1 million of equipment, then on that basis for you, I'm going to want to get paid for this. As a buyer, you can look at this and say, well, it's coming with $1 million of equipment, so let's look at the company based off of just the asking price and also the asking price less this equipment. So we'll get to the numbers in the memo in a second. First, let's start with this listing. Right, here's some of the basic numbers. Overall description. 32-year-old event rental company. Really like to see that. Has a great reputation. And it serves Broward, Miami-Dade, Monroe, Palm Beach, and Martin counties. These are all in Southeast Florida and a very popular area for weddings and for events of this nature. They don't work in just weddings here. It's important to note, as we talked about in the review today, they also do family gatherings, business and charity events. These folks provide a number of the things that you'll need for a wedding. So weddings and events are very expensive. And when you go to venues like this, generally you have a conversation about pricing. And the pricing for their products here is around tents of all sizes, flooring, pool covers, platforms, stages, tables, chairs, lightings, all the thing that you will need when you're renting from a wedding area, right? They supply a margin on top of that, and that's how they make their cash flow dollars here and generate revenue. What's key for you between this $1 million and all this underlying equipment is to have a conversation around, well, what kind of shape is this underlying equipment in, right? Just because there's $1 million estimated by the owner doesn't mean that that's actually going to be what the equipment's worth, right? So are these platforms and stages old? Do you need to buy more chairs? What kind of lighting is dated? All of these kind of conversations you'll have during due diligence with the seller and the broker, more the seller in this case. But there, the idea is you have to account for what cash flow you have to dedicate for new items post-close. So take a look there. But overall, seems like a great business, generates a lot of cash. And it has a very tangible, clear product offering here in terms of rentals. And they talk about the different events that they work on up here, including holidays. So good start to this one. Here they mentioned the business has a manager and several crew leaders and 25 to 45 employees, depending on the time of year. I imagine they have some holiday people that flex in and out, and also summer wedding folks that flex in and out, depending on what their calendar looks like coming up. They have a 20,000 square foot office and warehouse space that there's an industrial park and 15 trucks. So all of this equipment's included in the sale. It's a ton of equipment that they're including here. They don't mention the real estate up here. Usually if real estate's included in the overall purchase price, it'll be noted, but here it's not included. There's a note here at the end. It's available for sale or the lease to the new owners. So you can make the decision on if you want to buy the real estate as well, or if you want to lease. And on the bottom here, more of the same. Financing, they're willing to offer up to $1 million of seller financing. So on 3.5 million, just under a third of that, they're willing to offer a seller financing, which is pretty generous, at an 8% rate for 5 years. So another thing to take into account when structuring out this deal. Let's jump over to our investment memo for today. Again, this is available in our Skool, but it's a way to generate an investment memo using our AI prompts and backup model. Here's a link to the listing and some of the categories we're going to go through. Up top, we have a company overview that's going to touch on some of the things we already talked about. Here's just a picture of the overall listing that we just went through and some of the market stuff. What's nice about the AI prompts here is these memos used to take hours to do, but when you're looking at a number of companies at the same time, you can do what we call a quick and dirty memo that spits this all out by AI to take a look through. So here's some overall articles here on the US market for party rentals and party supplies and event supplies that you can read through. I think that's also very helpful. And then we go into the financial backups as well from today's review that you saw as a background. Here, note when we do these AI type reviews, this is not all going to be necessarily applicable to the current listing, but it's going to give you a good idea of what the company does to make money and then also what's available in that market. So when I think about this business that does event rentals, they go out there and provide equipment and services for weddings, corporate events, and parties. That's the main way that they make money. I want to have a wedding. I come to you as the event rental person. You rent me a table, and then you set me a bill based on the labor and the overall cost of those tables. Tent rentals are another way they make money. Tents can be very expensive. As you can see here, it's almost 35% of total sales in the party rental industry. Those who have planned weddings or attended weddings or looking at weddings, they know about tent rentals and how expensive they can become. Also in here, they talk on some of the other items. So lighting and AV equipment, delivery and setup, event planning services, custom decorative services. So if you're doing a holiday party and you want to be Santa Claus themed or another religion-based service, you could have, Hanukkah, whatever it might look like. And, you'll bring in those decorative services for you that they can charge a premium on, right? So they might have some influx labor and seasonality you have to think about as well, given their business model. So if they have 25 to 45 employees at any time of the year, keep in mind that means they have a pretty seasonal business and they might have more folks coming in the winter. And for the weddings in the summer, they might have folks coming in the summer as well to help you with all those different weddings. They also have seasonal promotional packages, which I already touched on, like summer weddings. But what's great about the AI here, again, it gives you a ton of different articles to read through and get smart on, right? So how to increase profits from event rentals, right? US party rentals, crucial steps for starting an event rental business. These are all diligence, right? Diligence is just you doing this research and figuring out, okay, is this an industry that I want to get involved with? Here's a breakdown of what the company's target customers could be or are already. So you have individuals for things like weddings and birthdays. You have event planners as well, right? So professional event planners that go out to individuals or corporates and then plan events on their behalf. They might turn around and work with you to rent out certain equipment, depending on the rental business that or the event that they are throwing. So if they're throwing a fancy corporate event for a fundraiser for the end of the year, you might be able to charge a higher amount. And if you're in the surge pricing, if you will, in the summer, like an Uber would, you can charge a little bit more for weddings. Corporate clients. So again, if corporate companies want to have their holiday party with you, or they're doing a fundraiser, nonprofits who want to raise money, government, municipalities who want to do things for public gatherings and greetings, catering and catering services might work with you. So if a catering company is working with a client that signs up with them to do catering, then they might turn around and come to you for equipment rentals. And a lot of the vendors in this space work together and share commissions. So I'm sure this company has a deep network of different caterers, different bands, different party planners, all in this kind of area that you also be acquiring in an established business. They also might work with holiday sales, theme party organizers, and group travelers. So here, that's where you can kind of see the AI might tail off a little bit towards the end, but just keep in mind, this is to get an idea quickly of what this company does and generate these memos pretty quickly. This thing's 15 pages, so to write all this would take quite a bit of time, but to use AI right now, it's very, very easy if you have the right prompts. So here's some articles here at the bottom to read through different segments of customer rentals. I'll look at the overall global market, what it takes to run the best event business in the industry. There's a lot of folks out there putting out great content and great articles, and the AI is able to, supplement some of these sections for you. Moving on to highlights. So on highlights, the event rental business is positioned to grow in 23 and 24 for robust demand. That I think is driven by people are very into experiential events now, given COVID lockdowns. We're a couple years removed from that. Despite the cost of a lot of these things, that's probably on the downside. We'll get to that in a moment. You also have the benefit of some inflation that for companies like this, they can generally push those costs off onto their customers. So while you might think, oh, kind of be hard to sign customers at higher prices, also true. These companies can charge a lot more for a tent than they have a few years ago, as long as they have the right customer base. So an established business like this that can kind of continue on might be hard to find new customers, or there could be some downsides there in a struggling economy. But they generally have strong profit margins because they basically take a rental price and then add a percentage on top of it. They have a diverse client base here. So as we mentioned before, you have individuals, you have corporates, you have event planners. That's a good, diverse customer base for you. They typically have good profit margins because, again, they're applying a profit margin based on their underlying costs. Recurring revenue for people that come back to you. So, if you're working with a company that's been in this area since 1991, they probably have some clients that do an event every year or customers that have come back to them. Something good to think about. They have a good brand reputation, and that's really important. So, again, if you have corporates that'll work with you, sometimes corporate clients can be really hard to sign. But if you have a corporate client that's doing an event every year in October, that's a great thing to have. Operational scalability, they have a team in place with good management. You're going to want to make sure you talk to that team during due diligence, but a good thing to think about. Technology integration, online platforms, and catering and some of these other events have been able to integrate technology the last couple of years, probably saves you some cost and time. And then, they've generated strong cash flow. So, over $1 million plus of cash flow is a really good number for a lot of people looking for small business purchases. That kind of $600,000 to $1.5 million SDE range is very popular. And again, there's some good articles down here to read in terms of the M&A rental market. Is now a good time to get in the market, etc. Now to concerns, overvaluation, right? So a main thing that we focus on at the bottom of these is the downsides, right? So we do one highlight section, but then we do a concerns and risks section, and we also do a license and requirement section. And then to end it, we do a top 10 reasons for failure, right? So just really focusing and taking, a majority of the back of this memo to say what can go wrong with this business. It looks all, nice when we talk about the numbers up front, but what can go wrong? So overvaluation, you might overpay for the business, during due diligence. And after you take over a business, if you don't run, good quality of earnings, or you don't get the numbers right, you might overpay for a company, which can really hurt post-close. Integration challenges, you might show up day one and have the wrong personality for managing people in this space. They might not respect you. There could be issues, handling different personalities in the team, key personnel. Make sure you have a good understanding of the corporate culture going into it. Unexpected costs. So if you're buying a business and you take over, there might be seasonality, as you mentioned before. So let's say the owner has run the business through, wedding season now, it's October, and, they're in Florida, so it's kind of a year-round market. But let's say there's some seasonality for the business in terms of whatever you want to call it. Let's say, actually in the summer, they probably have less for the weddings because it's hotter, but, coming up, there's some seasonality for the winter months, and you might have unexpected costs coming up to put down for cash for upcoming events or whatever it might be, and you might not recognize the revenue from those deals until later on, causing you to have a problem. You might have things from the past whether it's legal or events that happened that come up and you have to pay out of pocket. You could also have equipment breakdown, right? So let's say 30% of your chairs day one are missing a leg or about to be missing a leg. You have to replace those. So just a number of things can come up in terms of unexpected costs. That's why you always want to be conservative as you take over these businesses, especially in the first 6 to 12 months, as you learn to understand and operate them. Any prior litigation costs that can come up. You're working in the people business. There can be litigation. Someone slips on a dance floor, that's yours. You don't have the right coverage. Something to think about. Also, tax risks. If you didn't pay taxes on the business in the past, there's obviously ways to mitigate all of this through reps and warranties and how you structure the deal. But again, these things do come up. Customer defection is a big one. So if you sign with this company, if you sign up to buy this company and going forward, your two biggest customers leave and they account for 20% of your revenue, then you can be in trouble. And then also, unforeseen market disruption. So obviously there's a lot of talk about going into recession. There's been a lot of increasing cost. Maybe the wedding market has gone down and folks are having smaller weddings. Corporate events are spending less money on corporate events, whatever it might be. These can all, hurt your chances. So make sure when you're doing your projections and your models and your business plan that you're accounting for downside risk there, right? Like what if I lose 10%, 20%, 30% of my revenue? How does that affect me? And again, some great things to read through here in terms of articles that get pulled by the AI, which is great. The overall market, M&A risks, etc. Let's move on to licenses and regulations. This section is meant to be, what do I need to operate this business in a certain state? So, general business license, rental agreements are something to think about. What do your rental agreements look like? What are the terms and conditions? What happens in the case if something goes wrong? How is cash or money exchanged in that behalf, right? Let's say someone doesn't show up for work and the tables don't get to the right event. Who's in charge of paying for that cost? How is that reimbursed? All that kind of stuff. Liability insurance is a big one. So just coverage on the overall business. Is it enough as is? Do you need to buy more coverage? You don't want to get in a liability situation where you're in trouble for something that happens and you don't have coverage. That can be a huge detriment to your business. Occupancy permits. So if you throw a big party and you don't have the right occupancy, something to look at. Sales tax permit. Make sure you're getting the sales tax right. That can be a big thorn in a lot of business owners' sides. Inventory management. So your inventory here is going to be all the items that you have. So all of your chairs, all of your lights, all the different flooring and tents that you have. You got to make sure you can track all of those items. Moving down, employee training. What's the training currently? How do they train and bring on new employees? What is important for them to know going into it? And then a few others like zoning compliance, making sure you're abiding by all the laws in Florida, environmental regulations, nothing you're doing is, with hazardous material, et cetera, and workplace safety standards, just to make sure all your employees feel protected, have the right, standards in place for handling and transporting everything. No one's working, way overtime and falling asleep on the job, stuff like that. And, here's, again, more articles you can kind of read through to get smart, which is great. And then top 10 reasons for failure. So this is meant to highlight, what can happen if what can cause an actual bankruptcy situation. So there are bankruptcies in this space. I know we cover a lot of deals that look attractive. We do a fair amount of research on those before we send them out. But even then, we put that big disclaimer at the end saying, you can lose everything, including your house. It's because you can. Right? So you want to make sure when you're working in this space and you're lending against a personal guarantee for a lot of these SBA loans, that you're thinking about what could really go wrong, right? So number one, inadequate due diligence. That's for you to figure out during due diligence, not asking the right questions. But if you don't cover an unforeseen liability, for example, from the past, right, and all of a sudden it's yours to deal with post-close, it could be a big problem. And kind of lawsuits, litigation, stuff like that. You want to make sure you understand everything going on with the business. Number two, overvalue of the target. You didn't make the right adjustments on the front end. Again, attend our school if you'd like to learn more there. But if I overpay for this business, it's going to be my fault day one after close, and that's something that can happen all the time, right? So if the owner has said, "Oh, well, we grew 25% last year, and blah, 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 and everything's going great. It might be because of a one-time deal that they don't have anymore, or a one-time event that really was a huge part of their revenue. It's your job to dig in during diligence to figure that all out. Integration challenge mentioned before, the team, making sure everyone gets along. Same with cultural misalignment. Make sure it's a business where you're not going to have everyone leave day one as soon as you get the keys. That can be a big problem. Unclear objective and strategy. So if you start day one and you don't have any background in event planning or wedding planning, maybe this isn't for you. And if you feel like you can do it, then make sure you have a clear objective and strategy of how you make the money going forward. Right? You don't want to lose track of your objectives as a business owner. It can cause a lot of problems. Customer defection. Again, if the owner leaves and his top 5 customers leave, that's going to leave you with a big hole in your revenue and your cash flow numbers. And then unexpected costs. So unforeseen expenses related to legal fees, integration costs, operational costs, whatever it might be, just costs that you didn't see coming in, that can be a huge problem for you going forward. And then market disruptions we talked about before. And then finally here, we have our last section which we added on, which is operational items. So things to think about as you're looking at actually operating the business. You want to make sure you have a streamlined inventory management system. As we mentioned before, how do I account for my chairs are being lent out, brought back, my lights, my floors, all that kind of stuff. You want to make sure that that's a sound technology driven solution, and that you're not going to come into a situation where you don't know where your stuff is, right? And if they don't have a system in place and they're kind of using pad and paper, that's fine too. That means you might have a big advantage going forward if you are able to implement something that's a little more technology driven. You just don't know with these businesses. They've been around for a long time. There's nothing wrong with doing it on pen and paper, but it's 2024, and that can be an area where you can improve the business. So that goes both ways. All of these kind of do. Same with the efficient booking system. When you're looking at, here's our calendar, here's the dates that we have. How is that lined up? How do you communicate with different vendors, the different individuals, corporates, et cetera, that you're working with? Is that all smooth? Is it chunky? Can you improve it? Important thing to kind of focus on. Comprehensive rental agreement, looking at how you rent out this stuff. Is there something in the clause that doesn't make sense, right? Is there some sort of reimbursement or agreement portion, or is it kind of light on the agreement? You need to beef it up with a lawyer. All stuff to think about. Quality control, how when you bring back chairs and tables and all this fun stuff that you lent out to a giant party, how are you cleaning it? How is it stored properly? What's the main goal there? And, if you're bringing that in and storing it, you can talk to the team. There's 25 people on there and a few managers. Like, what is their process and what does that look like? The workforce seems like it's in place. They have a good workforce there, but is there any holes, right? Did a key manager just leave? Are you going to lose a key manager post-close because they're unhappy with the situation and they leave if the owner leaves? All really important stuff. People are hard and some of the most important parts of the business. So something to consider. Pricing strategies. How do you allow customers to rent these things, whether it's daily, weekly, or monthly? Maybe you have some longer term rentals. I have a feeling that's the AI there, but and event stuff, you're mostly on these kind of daily and weekly maybe, but different kind of contracts to look into. Longer term contracts for all these businesses are obviously better. A good example of long term rentals is porta potties, right? So your 45% of that market is construction sites, and construction sites generally up for a long time. So when they sign contracts with folks, it's for months on end, and it's a good thing to sign. This kind of rental stuff might be over a weekend. So, think through that. Inventory tracking we mentioned, insurance, some of these are redundant as you can see, and responsive customer support. So if something goes wrong, how does that work? How is that team built out? And then scalable operational processes. And this can go both ways again too, right? If you're looking at the business and the owner says something that truly shocks you of it being sort of a dated process, that might be how they've got it done for a long time, but a lot of changes that you can make going forward. So that's today's review. We'll try and do more of these. Again, these are all posted in our Skool as well for those that are interested, and we'll try and post some more free ones on the public forum for people to review, but that's a review.